Amazon's Q3 2025 report shows a 38% surge in profit, fueled mostly by its cloud unit, Amazon Web Services, AWS, even as retail projections remain modest. Here is a detailed breakdown of the company's financial and strategic performance. Financial highlights. Total revenue, $180.2 billion, up 13% year-over-year, exceeding analyst estimates of $177.8 billion. Net income, $21.2 billion, a 38% increase driven by cloud revenues and investment gains. Diluted EPS, $1.95, above the $1.57 expected. AWS revenue, $33 billion, a 20% year-over-year jump, its fastest pace since 2022. AWS operating income, $11.4 billion, contributing roughly two-thirds of total operating profit. Amazon's stock price rose over 10% post-earnings, hitting $246 on strong trading volume and positive guidance. Cloud division, AWS. As core driver, AWS remains Amazon's profit engine, growing faster than anticipated and accounting for the majority of operating income. Key factors: surging demand for AI infrastructure, including generative AI model hosting and chip offerings such as Trainium 2, now a multi-billion-dollar business. Project Rainier, Amazon's $11 billion new AI data center, came online this quarter to power the next wave of AI development and partnerships. Amazon's rapid AWS expansion comes amid fierce competition, with Microsoft Azure and Google Cloud reporting 40% and 34% growth, respectively. Retail and other segments. North America retail sales, $106.3 billion, up 11%. International sales, $40.9 billion, up 10%. Online store sales rose 10% to $67.4 billion. Physical stores up 7% to $5.6 billion. Metric Q3 2025 Growth Year ROI Analyst Estimate. Main driver, revenue $180.2 billion, plus 13%, $177.8 billion, cloud/retail mix. Net income, $21.2 billion, plus 38%, $15.4 billion, AWS AI investments. AWS revenue, $33 billion, plus 20%, $32.4 billion. AI, cloud migration. Retail sales, NA, $106.3 billion, plus 11%, $105 billion. E-commerce, Prime Day advertising revenue, $17.7 billion, plus 24%, $15 billion. Sponsored/product advertising. Amazon ends Q3 2025 as a tech and cloud powerhouse, facing intensifying cloud competition and a cautious retail environment. But with AI-driven AWS growth, reaffirming its position as a dominant industry leader. Third-party seller services and advertising are becoming increasingly crucial, with advertising revenue up 24% to $17.7 billion and seller services up 12%. Outlook and challenges. Holiday quarter, Q4, revenue guidance, $206 to $213 billion. Largely in line with analyst forecasts, signaling cautious optimism amid uncertain consumer spending. Retail performance, while steady, is not showing explosive growth, keeping projections below the bullish targets of some analysts. Amazon expanded layoffs, 14,000 corporate jobs, citing AI-led efficiencies and structural adjustments, not financial strain. Strategic insights. The surge in cloud profit is underpinned by rapid enterprise adoption of AI and demand for infrastructure, with retail providing stable but unspectacular support. Amazon CEO Andy Jassy stated that AI is accelerating the shift from brick-and-mortar to e-commerce and will be central to all future operations. Despite record sales, increasing costs from shipping and logistics are impacting margin growth in retail, while AWS continues to generate high-margin revenue. Project Rainier and investments in AI chips are helping Amazon to regain ground against Azure and Google Cloud. Apple's shares climbed as the company projected higher than expected iPhone sales for the upcoming holiday quarter, largely thanks to robust demand for the iPhone 17 lineup. Below is a comprehensive report on the drivers, challenges, and outlook for Apple's business as of October 31st, 2025. Financial and sales highlights. Apple reported quarterly revenue of $102.5 billion for Q4 2025, marking an 8% increase year-over-year and beating analyst forecasts. Net profit stood at $27.5 billion, or $1.85 per share, surpassing the $1.77 estimate. iPhone sales, a significant contributor, reached a September quarter record, though actual Q4 unit revenue dipped in China due to shipping delays. Services revenue also hit all-time highs, and Apple continues to see record active device numbers across all product lines. iPhone 17 demand and holiday quarter forecast. Apple CEO Tim Cook forecast that iPhone sales will experience double-digit growth year-over-year during the holiday quarter, with total company revenue expected to rise by 10 to 12%. This would outpace analyst estimates of a 9.8% iPhone revenue jump, $75.91 billion, and a 6.6% increase in overall sales, $132.53 billion. Strong demand for all new iPhone 17 models, including the Pro, Pro Max, and ultra-thin iPhone Air, drove this positive outlook even as supply challenges persisted. Supply chain and China market. Apple encountered supply chain disruptions that delayed iPhone deliveries in China, impacting current quarter sales. China Q4 revenue, $14.5 billion, down 4% year-over-year. However, the decrease was attributed to logistics, not weak demand. CEO Tim Cook expressed confidence that China sales would rebound in the holiday quarter, with high in-store traffic and strong reception for the iPhone 17 series. Despite these obstacles, Apple outperformed Wall Street's profit and overall revenue estimates, aided by the rapid adoption of AI-driven features and new product launches like AirPods Pro 3 and the Apple Watch. Metric Q4 2025. Value, analyst estimate, year-over-year change. Note or driver. Revenue, $102.5 billion. $102.24 billion to $102.26 billion, plus 8%. Record Q4, led by iPhone services. Net profit, $27.5 billion. unquote, plus 13%. Higher margins, cost controls, iPhone sales. $75.91 billion. $75.91 billion, plus 9.8%, projected. Expected record for holiday. China revenue, $14.5 billion, minus 4%. Supply not demand, bottleneck. Services revenue, record high. All-time record. EPS, $1.85, $1.77, plus 13%. Projected for holiday quarter. Apple fiscal Q1 2026. Apple remains on track for a blockbuster holiday, driven by iPhone 17 and new products, with global supply constraints expected to ease and China's momentum likely to return soon. Google has entered a landmark partnership with Reliance Jio, offering its Gemini AI Pro plan, including the powerful Gemini 2.5 Pro model, entirely free to over 500 million Jio users in India for 18 months. This move dramatically accelerates the competition among global tech giants to capture the vast and youthful South Asian digital economy. Initiative details. The Gemini AI Pro plan from Google, valued at rupees 35,100, approximately $396, will be rolled out in phases via the MyJio app, beginning with users aged 18 to 25 years on unlimited Jio 5G plans, then expanding to all eligible Jio subscribers across India. The offer gives users full access to Gemini 2.5 Pro, Google's most advanced consumer AI model, higher limits for image and video generation with Nano Banana and Veo 3.1, expanded access to Notebook LM for research, and 2 terabytes of Google Cloud storage across Photos, Gmail, Drive, and WhatsApp backup. Jio users can activate this plan directly through their MyJio app using a dedicated banner and registration process. Market implications. This partnership is the largest single distribution of paid generative AI tools, setting a new benchmark in the race for mass adoption in the region and establishing India as a priority for global AI firms. OpenAI announced a similar, but more limited, free ChatGPT Go plan for Indian users recently, and Airtel offers Perplexity AI to its users, underscoring the rapidly intensifying competition for digital and AI market share. Google's effort is part of a multi-billion-dollar push, including a $15 billion investment in India's AI infrastructure and the establishment of an AI hub in Visakhapatnam. Strategic and economic context. India, with 500+ million Jio users and 377 million Gen Z digital consumers, is seen as the world's largest and most lucrative digital adoption opportunity, projected to drive $860 billion in annual digital spending by 2035. Google's strategy focuses not only on consumers, but also on enabling Indian businesses and developers through Gemini Enterprise, which will feature both Google-built and Reliance-developed AI agents. Feature details: beneficiaries, 500+ million Jio users. Initial rollout, 18 to 25 years, unlimited 5G. Plan duration, 18 months, free access. AI model, Gemini 2.5 Pro and associated tools. Additional benefits: 2 terabytes cloud storage, expanded Notebook LM, multimedia generation, rollout method, MyJio app, then expanding to entire user base. Estimated value per user, $35,100, $396. Strategic goal, democratize AI, drive AI adoption, digital empowerment for India. This move establishes India as the global battleground for AI adoption, sets a new standard for accessible AI, and exemplifies the scale and ambition behind Google and Reliance's vision for an AI-empowered nation. Sundar Pichai, Google CEO, stated the partnership is about democratizing AI and expanding powerful tools to every Indian, echoing Reliance Chairman Mukesh Ambani's vision for making India AI-empowered. Reliance will support adoption in agriculture, education, small business, and healthcare, using Google's AI models as both consumer and enterprise services. Competitive impact. Google Geo's Gemini AI offer dramatically raises the bar for digital inclusion in South Asia, with the potential to bring generative AI to hundreds of millions of first-time users. By lowering cost barriers and integrating AI with popular services like cloud storage and WhatsApp backups, Google aims to foster daily AI use at unprecedented scale. The partnership is likely to pressure rivals, including OpenAI, Meta, and local telecoms, to ramp up their own zero-cost and premium AI offers. Western Digital and Seagate are experiencing extraordinary growth in 2025, driven by accelerating investment in AI infrastructure, which is propelling global demand for hard drives and mass data storage solutions. Financial highlights. Both Seagate and Western Digital stocks have soared more than 200% in 2025, far outpacing the broader tech market due to the AI-induced demand spike for hard drives. Western Digital posted Q3 2025 revenue of $2.29 billion, up 31% year-over-year, with net income rising 66% to $755 million, and strong gross margins of 39.8%. Seagate reported Q3 2025 revenue of $2.16 billion, an increase from $1.65 billion the previous year, and saw net income grow 80% to $549 million. Both companies have hit record-high share prices, Western Digital reaching $143.09, and Seagate $246.18. On the back of these results, AI infrastructure and hard drive demand, the surge is fueled by the global AI frenzy, which has led to unprecedented build-outs of AI data centers, where vast volumes of training inference data need to be stored, organized, and managed. Western Digital's high-capacity 32-terabyte SMR and 24-terabyte CMR UltraStar data center drives, along with Seagate's Exos and Skyhawk Hammer drives, capable of 30 terabytes per unit, are the backbone for hyperscale data centers and enterprise AI storage needs. Demand for scalable, reliable, and cost-effective storage is outstripping SSD growth, and hard disk drives, HDDs, are seen as the most efficient medium for cold and nearline storage in massive AI training workloads. Industry and strategic insight. The AI boom has fundamentally altered storage priorities. Data centers now require three-tier storage solutions: NVMe SSD for real-time data, HDD for mass capacity, and object storage for long-term or archival use, amplifying opportunities for both Western Digital and Seagate. Regulatory changes, such as data sovereignty laws and the proliferation of sovereign hybrid data centers, have intensified demand, forcing enterprises to store data locally and for longer periods, further driving hard drive shipments. Company Q3 2025 revenue Y-year growth, Q3 2025 net income, gross margin, key growth driver. Western Digital, $2.29 billion, plus 31%, $755 million, 39.8%, Nearline Data Center HDDs. Seagate, $2.16 billion, plus 30%, $549 million. Exos Skyhawk Hammer 30 terabyte drives for AI infrastructure, approximate based on prior year comparison. Both companies are rapidly innovating. Seagate is deploying commercial Hammer, heat-assisted magnetic recording technology, while Western Digital is scaling ultra-large ePMR and ultra-SMR drives, setting the stage for even higher capacities and lower cost per terabyte. Analyst and market sentiment: data storage providers are viewed as some of the top corporate beneficiaries of the AI boom, with investment shifting away from some traditional semiconductor players and towards storage/server suppliers. The industry expects AI-related storage demand to double within a few years, enhancing both growth predictability and long-term order visibility for these firms. Western Digital and Seagate's resilient financial models, operational improvements, and diversified products are reaffirming investor confidence. Key metrics table, strategic outlook. Both Western Digital and Seagate are positioned to dominate as the core fabrics of global AI infrastructure. With technological innovation, Hammer, SMR, and mass production capacity set to further consolidate market share through 2026 and beyond. As AI workloads grow more sophisticated and data sovereignty requirements expand, both companies are set for sustained, profitable growth. NVIDIA's CEO, Jensen Huang, expressed hope that the company's state-of-the-art Blackwell AI chips could be sold in China, but the decision rests squarely with U.S. political authorities, specifically President Trump and his administration. The situation is complex, involving technology leadership, trade relations, national security, and investor expectations. Current policy and CEO's position. U.S. export controls currently bar NVIDIA from selling its most advanced AI chips, like Blackwell, to China due to national security concerns. These restrictions were imposed in 2022 to prevent China's military and surveillance sectors from gaining access to leading-edge computing. Jensen Huang stated in South Korea that while he hopes to sell Blackwell chips to China, any such move ultimately depends on U.S. government policy and presidential decision. Now, with President Trump, Huang downplayed security concerns, arguing that U.S. and Chinese interests are best served by continued technology exchange, and stating, "It's in the best interest of America to serve that China market." Diplomatic developments and investor reaction. President Trump hinted that chip sales to China could be discussed at a recent summit with Chinese President Xi Jinping, calling Blackwell a super-duper chip, but later clarified that no agreement. Getty Images and AI search firm Perplexity have signed a global, multi-year licensing agreement that will allow Perplexity to integrate Getty's extensive library of editorial and creative images directly into its AI-powered search and discovery tools. This major partnership is designed to advance visual AI discovery while prioritizing proper licensing, content attribution, and the legal use of imagery. Deal structure and technical integration. Perplexity will fully integrate Getty Images API technology into its workflows, allowing seamless display of Getty's high-quality visuals within AI-generated answers, content creation, and discovery workflows. The deal covers both creative and editorial images, providing Perplexity users with access to premium visual content for a richer and more credible user experience. A cornerstone of the agreement is an enhanced attribution system. Every image displayed will include clear credit to the creator and a direct source link, educating users on legal use and the provenance of licensed visuals. Strategic and industry significance. The partnership arrives as the global AI sector faces mounting scrutiny regarding the ethical and legal use of copyrighted content. Getty has previously engaged in high-profile lawsuits to defend its IP, and Perplexity has also faced publisher lawsuits and moved to implement revenue sharing with news outlets. By setting a high standard for legal compliance and attribution in AI, the firms aim to reassure creators, foster better relationships with publishers, and act as a model for responsible AI content use. Both companies' leaders emphasized that attribution and accuracy are fundamental in an AI-enabled world, and responsible partnerships strengthen trust in both AI outputs and digital content ecosystems. Market and financial impact. Getty Images stock soared 25 to 60% immediately after the announcement, as investors anticipated expanded distribution, visibility, and monetization prospects for Getty's library through integration with fast-growing AI tools. For Perplexity, the deal significantly enhances the platform's credibility, content diversity, and user engagement, while supporting compliance amid increasing global regulation of AI feature. Details. Type of agreement: multi-year global licensing, API integration, content access, Getty's creative plus editorial images for Perplexity search/AI use. Attribution: mandatory credit plus direct source link on every displayed image. Market impact: Getty stock jumped up to 60% after partnership announced. AI sector context: addresses copyright, IP, and creator rights in AI era. Compliance benefits: educates on rights, reduces legal risk, boosts content quality. Strategic goal: lead in ethical AI discovery. Set industry best practice. This partnership is seen as a landmark deal for the evolving relationship between AI platforms and copyright holders, balancing access, legal use, and content creator recognition, while advancing the sophistication of AI-driven search and digital storytelling. Coinbase remains the only publicly traded crypto exchange in the US as of October 2025, but the market is shifting rapidly due to improved regulatory clarity, newly public competitors, and a booming digital assets sector. Coinbase's position and performance. Coinbase's advantage as the first U.S. crypto exchange to go public, Nasdaq Coin, has made it a dominant, trusted brand, particularly among institutional investors, helping it outperform earnings expectations once again for Q3 2025. The firm is a constituent of the S&P 500 as of May 2025 and is regulated in every U.S. state, holding 43 money transmitter licenses plus registration with major authorities worldwide, underscoring its compliance-first approach. Coinbase's global standing is strong. It ranks as the third largest spot exchange worldwide, trailing only Binance and Bybit in volumes, but holds a unique U.S. regulatory position. Regulatory clarity and market evolution. The Biden and Trump administrations, alongside Congress, have worked to clarify crypto regulation with new legislation. The Digital Asset Market Clarity Act of 2025, Clarity Act, and the National Innovation for Stablecoins Act, Genius Act, ending regulation by enforcement. These regulatory reforms confer clearer roles for the SEC, issuer oversight, and CFTC, market oversight, which now grant exchanges certainty to register, list, and operate as public companies. New publicly listed competitors. The regulatory shift has allowed new entrants. Gemini, Nasdaq, GEMI, listed in September 2025. Bullish, NYSE, BLSH in August. And Kraken is preparing for a listing in 2026. This growing slate of public crypto exchanges is maturing the market and increasing competition for Coinbase's premium pricing and institutional user base. Financials and strategic response. The global crypto market has expanded to $3.7 trillion, with institutional and retail adoption at record highs, a trend further amplified by the relaxation of U.S. regulatory barriers and surging Bitcoin prices. Exchange U.S. listed, launch year, market standing, strategic position. Coinbase, yes, 2021, S&P 500, U.S. #1 institutional, compliance. Gemini, yes, 2025, new entrant, targeting retail, institutional. Bullish, yes, 2025, new entrant, institutional focus. Kraken, expected 2026, non-existence. Top 5 U.S. institutional, retail split. Coinbase's leadership as the sole publicly traded U.S. crypto exchange is now being challenged, but its compliance, scale, and early mover advantages keep it ahead as the industry transitions into a more regulated, competitive era. Coinbase continues to diversify with acquisitions, including Deribit and Echo, expanding both trading and investment platform capabilities. Analysts expect Coinbase to pursue further M&A to defend market share, leveraging its brand, compliance, and relationships in both finance and government. Competitive and compliance landscape. While Coinbase leads on trust and institutional relationships, new rivals and shifting customer trends, e.g., more people wanting to trade assets beyond crypto, pose fresh risks. Execution on regulatory compliance and customer acquisition remains critical, as improved regulatory clarity brings much-needed responsibility. Sony, Apple, and Amazon are intensifying investments in technology-enabled services, AI-driven products, and immersive consumer experiences, setting the pace in major global tech trends during 2025. Sony, AI and immersive content ecosystems. Sony is pioneering next-generation tools for media and entertainment, unveiling hardware and software ecosystems at IBC 2025 that combine camcorders, studio cameras, monitors, storage, and advanced AI, IP, cloud capabilities. AI features include real-time digital signatures for content provenance, advanced object detection, and editing in both news and creative workflows, powered by proprietary sensors and AI chips. Sony's CI Media Cloud and Media Backbone Hive platforms now employ AI for verification, editing, and seamless cloud production, while Sony Bank is integrating generative AI with core fintech systems to speed development and boost customer service. Across imaging, entertainment, and B2B services, Sony aims to enable trusted, real-time creativity and authenticated media in an AI-dominated era. Apple, on-device intelligence and immersive hardware. Apple's Apple Intelligence Suite is now deeply embedded across iPhone, iPad, Mac, Apple Watch, and Vision Pro, delivering private, on-device AI for communication, personalization, visual intelligence, shortcuts, and image generation, even offline. The iPhone 17 series and upgraded Vision Pro M5 chip 16-core neural engine are built for real-time AR, advanced speech recognition, and faster AI-powered tasks, underpinning Apple's ambition to lead in personal and immersive experiences. Developers now have direct access to Apple's on-device LLM, fueling smarter, privacy-first apps and new capabilities, including live translation, Genmoji, and context-aware recommendations. Augmented and virtual reality, machine learning, and ecosystem interoperability underpin Apple's consumer-focused AI strategy for 2025. Company AI tech-focused flagship initiatives and products. Strategic impact. Sony AI-powered media creation, D2B, fintech, CI Media Cloud, Hive, advanced cameras, Sony Bank AI trusted, real-time authenticated media, rapid fintech AI integration, Apple on-device AI, immersive hardware, AR/VR, Apple Intelligence, iPhone 17, Vision Pro M5, personalized, private, immersive AI, developer AI ecosystem, Amazon Generative Agentic AI, Shoppable AI, Retail Help Me Decide, AI Shopping Agents, Interests, Rufus Personalized Commerce, future-proofing against autonomous shopping. Sony, Apple, and Amazon are aggressively using AI and immersive technology as the basis for next-generation products and services, aiming to redefine creativity, convenience, and user engagement across consumer and professional domains in 2025. Amazon, AI-driven shopping and digital services. Amazon is rolling out new generative AI services for retail, including Help Me Decide, which delivers personalized, AI-powered recommendations and shopping guidance based on a customer's history, preferences, and behavior. streamlining and personalizing online purchases. Its AI-powered interests and shopping guides, visual search, Lens Live, and the Rufus AI shopping assistant create a highly interactive, guided buying experience. Amazon is preparing to partner with third-party AI shopping agents, anticipating an era when autonomous agents handle much of consumers' retail interactions and product discovery. Massive investment in agentic and generative AI, along with cost-saving measures, 14,000-plus corporate layoffs, shows Amazon's bid to lead AI-powered commerce while defending its advertising business from AI intermediaries. Comparative.